November 18th, 2013, Assessment Appeals Board for Tulare County. Sitting on the panel today is myself, George Zunian, Lance Morris, William McKinley, and Glenn Fowler is our alternate for the day. Going to agenda item number 1. Does the board have any issues, questions that would like to raise? And to the staff? And finally, the assessor. Comments?
None.
Moving right along. First item is agenda number 2 is Fruit Patch Inc. Are they present? Okay, would you like to step forward? Yes, you've been previously sworn in, but just we'll swear in yourself and the assessor for the beginning of the term here. So if you wouldn't mind stating your name.
Daryl Carlos.
Wayne Boos.
Okay. And the assessor? Okay. And if the clerk would like to swear them in?
Right hand. Do you solemnly swear or affirm that the testimony you're about to give in the matter now pending before the Assessment Appeals Board is the truth, the whole truth, and nothing but the truth?
I do.
Please state your name for the record.
Wayne Boos.
Mr. Chairman, I will now read the applications and APN numbers for the record.
Yes, I have to too.
Okay. Refresh our memories a little bit about why we're here today, and then go ahead and state your additional information.
Good morning. Yeah, we were here last session, and basically we're appealing for making an application for change assessment for Fruit Patch for their machinery and equipment based on economic obsolescence. Basically, their business has been in significant decline in the past few years. The years at issue are 2011 and 2012. The last time we met, the board wanted some additional information, a little more detail from the tax return, and so I have that today with me. In the packet today, I'd just like to point out a few items. The first one is just a sort of a simple diagram showing the entity structure. There's FPI Holding, who's the parent company, is the parent of Fruit Patch Inc., and then there is, within Fruit Patch Holding, there is a disregarded LLC. It's called Fruit Patch Sales. That was basically, I think when they did the acquisition, there was two companies. They had Fruit Patch and then a sales company with a little bit different ownership. And so I think when FPI brought it together, they brought all of it under one house, basically. And I have on page 65, you'll see they have to file a tax return for the disregarded LLC. So I also enclosed a copy of that. It basically just recaps activity that is reported on the consolidated return. It's more of an information return for California. But anyhow, one of the arguments that we tried to kind of overcome is the fact that Fruit Patch Inc. and Fruit Patch Holding are one and the same operation, basically, because of the way they report on their federal tax return. And basically, the sales company, actually, after we met last time, we went and talked to the client. And it was kind of funny because they weren't even too aware of the fact that they do the separate company reporting because they look at everything on a consolidated basis. But they do, I think what they're doing is the old Sales Corp GL is still somewhat active. But as I pointed out, they're not recording items, separate company. Some of their supplies and whatnot are being expensed, like their packing supplies are being expensed on the holding company, even though they relate to, to the packing. So basically, it's our opinion that you need to look at the two together. Also, on page 2, you'll just see the first page of their marketing agreement. It says this agreement is between Fruit Patch Inc., a California corporation, and Fruit Patch Sales, LLC. So when growers do business with them, they're basically doing it with both of the companies, which, in our opinion, is points to the fact that they are a unitary operation. Mr. McKinley, last time we met, he had a question on page 3, which was the other deductions, and I did bring that schedule. It's on page 30, the detail for that $6 million. A large portion of it is amortization of the Goodwill on the purchase. And then you can see the $4.6 million of it is amortization, and then you'll see the rest of the detail being, various expenses, insurance, and large miscellaneous account. But there was also, on pages 81, 82, and 83, I just attached the additions. There was a little bit of some confusion as to recent additions. Their last major, if I can use that word, addition was in 2010, which was the citrus line that they added, which was about $2 million. And then in 2011, they had about additions of $400,000. And in 2012, they did add $600,000. It looks like they also added a sumo packing line that year. But
That's citrus.
yes, that's citrus also. That's basically all I have. I don't know. Were there more questions?
Good question. Rather than to go to the assessor, let me just clarify what you just had presented by asking the board to, if they have questions. Okay. Then, if that's the case, we'll let the assessor chime in and see what you have.
First of all, we had a prior hearing with this applicant in December of 2012, and in the findings, it's actually number 10 of the findings, it says the board finds that these balance sheets fail to show that the losses experienced by the applicant's related legal entity had affected the applicant so much that the applicant's fixtures and personal property should be reduced in value due to permanent obsolescence as of the lien dates that were in question. If the applicant had leased its facilities to a completely independent fruit packer, the value of its fixtures and personal property would not be reduced merely because its lessee was losing money. The board believes that it should treat a related separate legal entity in the same manner. And I'd just like to reiterate what we kind of went over last time, that overinvesting in fixed assets does not warrant a reduction in the value of those assets. By reducing the applicant's value, it creates an unfair advantage to other entities in the same industry. The applicant has had millions of dollars in profit over the past 2 years and has also purchased millions of dollars in new equipment. That's all I have.
Okay.
From the prior findings.
Okay. So there were some issues that evidently don't have any bearing on the case as far as consolidation of the two companies. It was originally operated as one, so in effect, this consolidation in what has gone on outside of what we're seeing is negligible or non-existent. Is that correct?
Repeat that.
In other words, in effect, there isn't any other entity that is being consolidated into these figures. What we're seeing is Fruit Patch's operation.
That is correct.
And just to refresh my memory, who is hearing the case today? Myself and
Rosini and McKinley Morris.
Morris.
Board members.
Yes.
Fowler is the alternate.
Right. Okay, Lance, do you have any questions?
Not yet.
Mr. McKinley?
There's much detail here. We're going to have to study this a little bit.
Okay. Then there isn't any additional information. Is there any other summation that the assessor would like to give the panel?
No, thank you.
Okay. And the applicant, any summation from your perspective?
Well, as with regards to Ms. Lee's comments with regard to the prior application being denied, I think in part, I think we didn't do a good job of the presentation at that time, so I don't feel that the past ruling necessarily applies to the current situation, and also we are talking about different years. And one thing that that Mr. McKinley kind of pointed out was, that some of the expenses were non-cash items, such as a depreciation and amortization. I think in the prior packet, I did include part of the balance or part of their income statements, which right. And the only reason I refer to it is there's a cash flow statement in there, which you might be of some interest. It's on. You probably don't have the prior. Do you have the prior packet also? On page. Let's see. On page 14, there's just a cash flow statement which you might want to consider also in your factors. And it basically, for example, in 2012, net cash provided or used in operating activities, you'll see that they actually had negative cash generated of $7.8 million. 2011 was close to break. Now that's all I have.
This is page 14 of the prior package.
Correct. Yes, sir.
I have a quick question.
Yes, sir.
As I understand your argument, you're saying that because our company couldn't make money with this equipment, it is obsolete. Is that correct?
What we're saying is that because of economic factors outside of the company's control, they're unable to make money with that equipment.
And what evidence are you presenting that shows that the equipment itself is obsolete?
The equipment itself is not obsolete in terms of operations, but just in its economic usefulness to the taxpayer and the fact that the demand for their product is not sufficient.
Basically, that's something that I have been more in tune to listening to in the last 3 or 4 years, rather than economic obsolescence for an industry as a whole. The components that go into this, basically, because you had given us a list of all of the companies that have gone out of business that is in this niche, and there's maybe 1 or 2 left, and 3 or 4 or whatever. So in effect, if you took all of the equipment and parceled it out, for instance, conveyor belts, air compressors, so on and so forth, would that come up with a value higher or lower than your book value you're presenting?
I think it'd probably be lower.
You think so?
Mm-hmm.
Yeah, it would be lower because it's very unique to the particular tree fruit industry. You can't like rent almonds or, citrus on it. That's why you see them actually trying to get into the citrus industry, having to go out and buy new equipment to do that, which for them didn't really work because they didn't have the marketing arm for it. But it is there's just a glut of tree equipment on the market now.
That's what I was getting at, because we've had this in other cases where somebody has actually declared that the value is on a piece-by-piece basis rather than the economics of the operation on an ongoing basis. And that's what you're saying. Okay? Any other questions? I'll give the assessor a chance to chime in one more time because there's a little bit of testimony there that you might want to rebut.
Well, I think, asking the applicant their opinion of value, of course, they're going to say it's lower. They had an opportunity to have an outside appraisal done, which would have been a fair representation, but failed to do so. Their prior appraisal from 2008 showed that the values were much higher than what the applicant's opinion was, and so I don't really think that they can make that kind of determination since they aren't certified appraisers.
I understand. Any other questions? Then here again, you've been very patient in waiting for a decision on this. We're going to take this, because there's so much information here, again in closed session, and you'll be hearing from us within 60 days.
Okay. Thank you. Thank you, Christy.
Okay. Looking at the agenda, as soon as I find it. I believe that the next item, agenda item number 3, is BJ's Express Market. This is also a continuation from our previous hearing. Are they here for today? Okay. You'd like to step forward? Again, just to make it a continuous process, if you wouldn't mind raising your hand and have the clerk swear you in again.
Do you solemnly swear or affirm that the testimony you're about to give in the matter now pending before the Assessment Appeals Board is the truth, the whole truth, and nothing but the truth?
I do. I do.
Please state your name for the record.
William H. D. Zavala. Osama Rouge.
Chairman, I will now read the applications and APN numbers for the
I'm
record.
sorry, I need to get the spelling for the record, please. I got Mr. Osama and the other guy's name. Can you spell it?
W-A-E-L, and the last name A-R-O-U-C-H.
And then our other witness?
Last name is D. Zavala. D-E. E as in zebra, A. V as in Victor, A. D-E-Z, A. V as in Victor, A, L-A. That's correct. William. Sorry?
I'm sorry, can I have your title, please?
I'm an EA.
Okay.
If you could summarize where we left off, what we're going to be discussing today, I'd appreciate it.
Well, last time I was here by myself, and this time we asked our bookkeeper to come and present the case for us. So we kind of want to like start over now, if we can.
And the issues,
Issues is, it's, you know what, I'm sorry, but, excuse me? There's like 2 packages, there's
For
2
each.
stores, so I should ask you to give 2 packages for each.
So you have to
Tell them.
not all back.
That does look different, though.
This one has October 28th on the front.
You should have a page, you should have one packet that's 41 pages, and the other one's
Oh,
55
this one
pages.
says one of 55. Okay, so one of 41, okay.
okay, so in other words, the issues that were being discussed prior, if you could restate those for us?
You know, the assessed value of the equipment in the store were just overstated a lot more than the actual, you know, depreciated value of all the equipments we have. You know, we talked about that everything we have in the store are over 20 years old, and they were still appraised for over the brand new current value of the equipments right now.
Okay.
And I would like to have Mr. Zabella talk for us about.
Cox, if you look at both of those packages that you have there, one has a history for each store and how the equipment was actually purchased throughout the course of the business. In addition, what we've done is included actual brand new, the cost of brand new equipment from pages, I believe it's 10 forward. It gives you a list of every piece of equipment that we have on page 3. Page 3 is a complete equipment list for both stores. There are some companies that are providing other equipment for convenience for the client that's not owned by the companies, and we believe that might have been included in the original assessment, and it's not their property at all. We also went through the auditor's work papers and found that if you go to page 4, I have listed out what's on the federal income tax return as machinery and equipment, and listed out all those items that are basically inclusive of machinery and equipment, and the leasehold improvements that ties into the federal income tax return, page 4. And right next to the number there lists the FITR, which stands for the federal income tax return. The numbers we have here list basically what was presented on the federal income tax return, and all the way to the right you'll see the brand new cost of replacing that equipment and how much it is. And we have the supporting documentation for that equipment behind the pictures of all the equipment that is currently in place. We've numbered them to show what they are. And in the auditor's work papers, he has the machinery and equipment, and then additionally after that, he specifically lists out each piece of equipment in addition to that. So we see that the auditors actually placed the equipment on there twice. So there's duplications within the work papers themselves.
In which location was that, or both?
They're for both.
Both.
So
I'm just going to back up just a second, because on our applications that we have, is there findings of fact that were requested?
The, I believe the.
That was resolved last
applicant did not, did the applicant request findings of fact? I don't believe so.
I'm sorry, say that again?
I believe the applicant did not request findings of fact. I don't.
I
have
believe
any
that
notes
was the
about
case. I
that.
just want to make sure.
Yeah.
Okay.
I'm sorry, could you explain that last statement? The auditor duplicated, I'm sorry, I don't understand.
On his work papers, if you look at page 4 of our packet on either store, we have listed in bold the machinery and equipment, okay? And then listed all the items that are basically inclusive of that line item for the federal income tax returns listed there, the coolers, the ATM machine, the cash register, ice merchandiser, deli, fryer, all that stuff is all inclusive of the machinery and equipment per the federal income tax return. The auditor placed in his paperwork this line item, machinery and equipment, and then proceeded to go on through other schedules within his work papers and listed out these items that are already inclusive of line 1, which is the machinery and equipment.
Where is that in your packet?
That's not in our packet. That was in the actual audit work papers. Unfortunately, we were never given an opportunity with the auditor. The auditor requested documentation to do his analysis. We gave that to him. We basically had no one-on-one contact. He never asked us what was inclusive of machinery and equipment or asked us to detail anything out. So we were unaware of how to view his documentation until this came about. So I went through it in detail, found out that we have machinery and equipment, and then he goes on to the list. What is it? For instance, the POS system on a different schedule, and then the cooler, the cooler boxes on another schedule. And I'm like, wait a second, that's already inclusive of machinery and equipment. Why is he putting it down here twice? So that's why the assessed value or the assessments, what's on the report is almost doubled from what I can see.
So on the application that I'm looking at, we're talking about the assessed value at $383,000. This is for Demery. Okay, $383,000 versus $67,000 as far as your value is concerned that you're presenting.
Is that for 2008 or the
2011?
It's the 2009 roll.
2009 roll? I think I both listed on both of them the first year that was listed in the roll. So
The roll value for 2009 was $372,745.
sorry?
The roll value for 2009 year was $372,745 after
Right.
the audit results.
And the brand new cost for that, sir, would be $252,000 as detailed on Schedule 4.
Yes, because of the duplication?
Correct.
Okay.
And that's brand new
That's
prices.
if we buy a brand new right now.
Right.
The equipment's been in place for almost, 20 years?
Right.
Yeah. It's
See,
good
one of the
quite-
stores was, built in 1983. That's the Demery store, and the other one, the BJ's number 2, was actually built in 1987.
Which was yeah. So we're looking at equipment that's 17 years old from the time of the roll and 21 years respectively.
Okay. Any other questions from the board? We'll move on to the assessor. Assessor can make your I'm sorry.
On your application, you show a reduction of land for improvement in structures. You show no personal property. Substantial reduction between improvements and fixtures. I don't understand how you can have a situation with no personal property.
On the application, sir, I wasn't really.
This is your people.
Right. That's, I prepared that document, yes, sir. I was unaware of the form's actual makeup, so I did the best I could. It was kind of, last minute ditch effort to find out, to actually just put in an appeals process. we weren't given the, I used to work for the Board of Equalization as a sales and use tax auditor, and generally the first process for the appeals process would be talking to the supervisor and then, to somebody else and so on and so forth. And then the last step is this step here, sir. And we went from the audit to here. So we've missed all these other steps, unfortunately. The auditor never described them, went over his work papers with us, didn't do any of the detail that you would expect to have been presented before coming here.
So then, your applications that you have on values you have on your applications are not what you're suggesting. They don't have to be.
It could be slightly different, but it should be the same. We're basically using the same values as listed on the federal income tax return for fair market value. And I believe when I filled out that document, it was basically the same. I just didn't know where to put it: machinery and equipment, personal property. I didn't know exactly how to fill that form out.
So you're saying what the assessor says is 383,670.
Yes, sir.
And where is that amount in your schedule?
Page 4.
I'm looking at page 4, and I don't see that number.
What do you see? What number do you see? There's both page. There's 2 page 4s. One's for 62,600, and the other one is for 46,275.
46,275 shows up on which application?
The 46,275 is for this is BJ.
Emery,
That's the
Emery,
Yes.
the Emery property. Well,
So the 41-page exhibit is for Demery.
Yes, ma'am.
the year being appealed is 2010, correct, for both? And you've been in business for quite some time, so the values have been consistently that high from your remembrance, from your recollection? The assessed value that the county has been assessing you has been in the...
This was an escape.
The values were based on an audit that happened
Okay.
after the original.
They enrolled substantial
Purchased the store in
escape.
Oh, it's a... Okay.
We didn't know the appeals process
But
at all. We wanted to
It's only
do
covered
an appeal for
2009 and
every roll
2010.
year.
I don't know why.
When my experience is, you were appealing the audit work papers, and that would include all 4 years. We didn't know. Unfortunately, we were naive to the fact of how to prepare the documents, ma'am.
Yeah, they've only appealed 2009 and 2010.
Not know that we needed to appeal each year separately.
Yeah.
And we have a copy of the audit work papers?
I have a packet I prepared. I didn't make a
We're going
copy.
to get to her
Right.
presentation
Okay.
in just a moment. Anything else you'd like to add at this time? Then we're going to go ahead and let the assessor make her presentation.
First packet's for the Demery location, and then the second packet is for the Walnut location. Together. I prepared separate packets because I wasn't exactly sure, since technically they're separate entities, separate corporations. So starting with the Demery location, it's a convenience store and gas station. There's several gas pumps. There's 3 gas tanks at each location, and there's a large canopy. There's refrigeration units, racking, shelving, and various other items, including security. The breakdown of the assessment for the Demery location is trade fixtures at $332,261 and personal property at $40,484 for a total assessed value of $372,745. The assessor, I'm just going to go over the Demery location first.
Sure.
In case there's separate questions. The assessor completed an audit in February of 2012, which encompassed the lien dates of January 1st, 2008, 9, 10, and 11. The assessor reviewed the applicant's depreciation schedules for each location, their allocation of costs for personal property, trade fixtures, goodwill, licensing, covenant not to compete, and other startup costs. This location was purchased in 2008 for $615,000. That did not include land or building. Of that amount, $510,000 was allocated to intangibles of goodwill at $270,000 and covenant not to compete of $240,000. Only $45,000 was allocated to fixtures and equipment. Since the allocation was unreasonable, the auditor determined through the use of Marshall & Swift valuation guides, on-site visit, and comparables that the cost of personal property and fixtures when the property was purchased should have been $383,282, leaving $171,718 of the purchase price for intangibles. During the course of the audit, the auditor asked the applicant for a breakdown of and determination of their goodwill and covenant not to compete. The applicant told the auditor that there was none. The applicant states that the specific costs allocated by the auditor were overstated and provided copies of invoices for the canopy located at his store in Porterville, which is not part of this appeal. He also provided an equipment estimate completed September 10, 2013 in order to provide examples of the costs of newer equipment compared to the auditor's allocated costs. The applicant provided costs for similar equipment but did not include installation, freight, or sales tax, which are all part of the value for property tax purposes. When asked for the details of how the goodwill figures were calculated, the applicant stated that calculations did not exist, as I stated. Although the details of the auditor's valuation may be contested, the overall market value for this location is an accurate reflection and comparable to similar properties. The Assessor's Handbook, Section 504, states that if the taxpayer's allocation between improvements, equipment, and goodwill is not an accurate reflection of market value, it should not be used. By accepting the applicant's values that are not reflective of market value, we're allowing the applicant to have an unfair advantage over his competitors with similar property within the county. In Exhibit A, you can see on page 4 the breakdown that the auditor did. And as you can see towards the bottom, the items that have no value added are the same items that the applicant is stating that they were concerned may have been picked up as part of the valuation. And again, these values were determined using Marshall and Swift guides because we didn't have any breakdown from the applicant during the time of the audit. And then behind that page are pictures of the store. I apologize for the bad photography. Switch over to the Walnut location. It's basically the same thing. That location was purchased for $750,000 in 2004.
Mr. Ozunian is still on Demery, I think.
Oh, I'm sorry.
Sorry, Mr. Chairman, are you still on Demery?
I was just looking at the presentation for Demery, yes, but I had a question there, but continue.
Would,
Well, in effect, basically, this is a cold storage box on here?
Cold box?
Yeah.
Is that there's one-
19-door cold box and 4-door cold box.
It's like
Oh,
the
I'm
sixth
sorry.
item down from the top.
Yeah, and then you had allocated it at 62,000?
At $60,750.
Okay, very good.
Estimate I provided for the cold boxes for both stores, that's with installation.
Okay,
Everything we provided is with installation except for the gas pumps.
okay,
The canopy was like about $33,000 installed.
okay.
States
We'll,
that in
we'll get back to your rebuttal here in just a second, but let the assessor finish.
On the information that the applicant provided to our office previously, there was no installation charges listed on the estimates. So, anyway, for the next location, Walnut, the applicant purchased that location in July of 2004 for $750,000. That did not include land or building. It was just the business itself, equipment, whatever else. Of that amount, they took less than 10%, $61,500, and allocated that to the gas and store equipment. $677,148 was allocated to Goodwill. The applicant's property at that location includes a canopy over the gas filling area, 4 pumps, 3 fuel tanks, refrigeration units, shelving, counters, a hood, cooking area, typical of a gas and convenience store. When comparing other similar properties, including properties owned by the related parties of the applicant, Goodwill was typically between $22,000 and $120,000. The auditor allocated $422,827 to the equipment at this location, $100,000 to inventory and miscellaneous, $15,000 to liquor license, and $212,173 to Goodwill, which is significantly higher than what's typical. Basically, page 4 has the breakdown for this location. And although the applicant may argue that specific line items may, you can argue the cost of those items, these were estimates made to come up with a total value for that property to make it fair with other convenience stores and gas stations within the county. The pictures are a little better in this one. But the canopy on this one is, I would say, very similar to the one at the other location. I didn't see any differences. So kind of to summarize, the main problem here was that the Goodwill allocation was extremely high, and there wasn't enough of the purchase price allocated to equipment and fixtures.
Okay, any questions, additional questions from the panel? Board members?
Why don't your presentations have the tanks?
Yes, sir. There's an invoice there for the cost of those tanks, and those tanks are $57,000.
Say again.
1 second.
There is a page that have an estimate, specifically for the tanks, and it's
Page 11. Either one. Or, I'm sorry, that would be for Walnut. For Walnut,
one application, page 11.
page 11.
That's an actual recent estimate for the tanks.
So $37,000 for the tanks.
57,000.
57,763.
57, okay, I'm sorry.
And that's also recapped on page 4 of our presentation, right-hand side, the brand-new equipment for 2013. The price of the tanks is $57,000. It comes directly from that invoice or that estimate. So each one of these has a number next to it, and there's an invoice in the very back of the packet that would correspond to what the brand-new price of that equipment would cost.
All right, so let's kind of keep it specific. Then where it shows 146,141 on their report, what are you showing on the He's showing the value of this item.
Oh, yeah, they have it. They have 122,000. They have 122,000, and we have it at 57,763.
Right.
Without
In
installation.
the audit, they have like different values for each store. It's not the same, like the tanks in Demarie cost different amount from the one in the other store.
Those tanks are
And
how
they're
old?
not the same, by the way.
How-
They're
20-some years?
like, the one 83 is, well, it's 83 is 36 years old.
I had a question. In the applicant's packet with the listing by Verdugo Construction, does that include tax and installation? Or is that just the cost of the tanks?
Yours is
Actually,
just
for
the
the
cost.
tanks, actually, I think it's the cost. That one does not include installation either. So pumps and tanks doesn't include the installation. But everything else, it's installed, like all the other stuff.
So just, I apologize, just following that train of thought, and I'm looking at the Demarie property. There's a 12,000 gallon tank and a 5,000 gallon tank on that property currently right now. And you've submitted if you were to buy a 88,000 gallon tank and a 5,000 gallon tank, it would cost $57,000 plus sales tax plus installation. So they're not exactly the same, a 5,000 or a 8,000 gallon tank versus a 12,000 gallon tank. I don't know what the big price differential there. It might be pretty substantial.
They change the way they make the tanks with time. Now when you wanna, they usually make them either 8,000 or 5,000. You want 8,000 tanks and a 5,000 tanks for like the premium. And that's what I got as like the new way they do gas stations now. They just do the tanks out 8,000s, and that'd be like close to what we have there.
Right. So
I suppose installation would be maybe about $20,000 more.
yeah, that was my next question. Do you estimate double the cost for the that when I drive by a gas station and they're putting in new tanks, that's a huge process. It's tearing up concrete and redoing everything, and it takes a long time. And
okay, to maybe replace it would cost a lot more than putting it in the first time. It's okay if you want to like dig down, pull the old tanks, and pay for them to haul them out and stuff. But we're talking about those tanks were installed back in 1983, and they're still there. So there's only the cost of like putting them down and installing them, and it's not that outrageously expensive. I upgraded the gas station in Porterville, the one I got the examples from, and we did not change the tanks there, but it's not outrageously. You don't pay for installation as much as you pay for the equipment. It's not even close. So the main expense is actual buying the equipment.
the actual tank, yeah. Okay.
One of the things that the assessor brought up was that it seems to the assessor that the amount allocated to Goodwill was excessive. And my understanding of Goodwill is that it's the excess profitability of the business over and above the industry standards. And in effect, was there any computation that you have or any comment you want to make as far as why the goodwill was what it was stated. Any computations, any reasoning for that? Are these locations superior in income producing than the industry standard locations, even within our county?
Usually we allocate, when we buy this kind of business, we actually buy the goodwill, we buy the business, the business itself. So we usually allocate it at, put in the biggest amount to the actual goodwill, and then we put money to like the cabinet not to compete, and then little bit of leasehold improvement, and the rest to the fixture and tax. And we usually consult with our bookkeeper when we do this stuff. We don't really know the actual standards for each county and how they calculate this stuff. We
Right.
From, and we had different bookkeeper from Bill now, and we usually ask him, what do you think the way we should allocate the price? And
Well, do you agree with the assessor in the one statement that she made, in that the industry standards may be 25% of the purchase price allocated to goodwill, in other words, what I'm saying is that your allocation being higher than that was based on what? The income of the production of the location?
not necessarily, really. We don't have a set standard to how we allocate them, but we always, have the highest number, within the allocation to the goodwill.
Right, I understand. In other words, when you have an arm's length transaction of X, and you try to determine whether it's equipment,
Like
goodwill, or whatever it is,
75% will go to the goodwill.
okay. All right. Any other questions by the board members? Any summation from the assessor?
Could I just ask a clarifying question of the applicant real quick? They've talked a lot about substantiating on the Demery property at $261,000 value, but I haven't heard any comments yet to where the $46,275 came from. Can anyone shed some light on how you derive that figure?
$46,275?
Yeah, the $46,000 and the 2008 fair market value column that you have.
Well,
We've talked a lot about the supportive evidence in the back for the 261, but I don't see in the packet any support for the 46,275. Is that just an allocation, a guess? Where are we at with that?
Allocation from the original.
basically, it's above and beyond the fully depreciated value of the assets. So the assets that are listed here on the 2008 column are assets that have been fully depreciated by either the previous owners.
The accounting depreciation has nothing to do with fair market value, so...
What? I'm sorry?
Accounting depreciation doesn't necessarily correlate to fair market value,
Correct.
so...
What we're saying is that the equipment is fully depreciated. It's obsolete. It's about ready to die. It needs to be replaced. What the client provided us when we did the initial breakdown through the balance sheet and so on and so forth, we asked them, what would you pay for the fixtures and equipment, machinery and equipment, so on and so forth? What did you do? We actually get the information directly from the final escrow of the purchase, and we basically put that information in. Look at all these numbers. If you were to allocate the total cost that they had associated with that, it's still higher than the fully depreciated value of the asset, which would be zero, and that would basically mean
Because anytime
they applied a value to basically a piece of equipment that's obsolete and needs to be replaced very soon.
And I would think that anytime you depreciate something to zero, and it still has some retained market value, that yes, you would have an above valuation. So if I can just summarize your comments then, in clear terms, the $46,275 is merely an opinion of the applicant as to what it was worth at the time of purchase?
Correct.
Okay.
Now, when you buy something that's 26 years old, how much value you put in it?
Apparently you put $750,000 and $615,000 as the value when you purchased it, correct?
Sorry?
When you purchased those gas stations, the amount you paid, $615,000 for the Demery location and $750,000 for the Walnut location, did you believe that was the value of those gas stations at the time?
Well, I can.
Because whether or not,
The BG's number 2, I recall we purchased it for $750,000. We allocated, I think, $60,000 for fixtures and equipment and $30,000 for leasehold.
I'm not concerned with your allocation. I'm wondering if you thought the gas station was worth what you paid for it at the time.
That's $750,000, or I guess.
That was the market value of the gas station. It was a fair arm's length transaction?
Yes.
Okay.
Otherwise, we won't buy it.
Okay. Of those amounts, we're saying approximately half is the equipment value at those locations. Do you also own Strathmore Handy Market?
I do.
You own that one? Your Goodwill allocation from 2004 was $123,500 at that location. What's the difference in Goodwill between that location and these locations? What about Applegate Market?
What was the question
Those
again?
are not.
That's not yours? What about Day and Night Market? What about Sunnyside Market? No? Okay.
But also included in that dollar for the 750,000, or what was it, 700 and how much?
615.
That includes inventory and other things as well.
Right, inventory was estimated at 100,000.
And if you
By
were to
the
go,
applicant.
if you were to go 50-50 on what you're explaining, I see where you point, where you're driving to, basically. What I'm saying is that, and what we've listed here is basically the brand new cost of this equipment, the same equipment would still be under the assessed value that was used by the Swift.
It's not the same equipment. Some of it's not even comparable. You can't take different size tanks and say they're the same cost. You can't not include installation and make up a
Not to be
number
able
for
to get the same
installation.
things.
You have to bring in documentation to substantiate your claim.
You can't get the same exact thing that was put in there like 26 years ago. You can't. Now they make tanks
Established.
in different size, and the tanks, the estimate I brought is actually bigger than the tanks we have over there.
Actually,
They're bigger tanks.
we've established that we established the 2008 amounts listed in the applicant's paperwork is their opinion of value at the time of purchase. That's their opinion. That's it.
Okay. I think it's important for the board to recognize that point because while Ms. Lee's allocated a higher amount out of the purchase price, the applicant's opinion here isn't supported by things like listings for similar equipment on the open market to determine a fair market value. So the $46,000 claim here is really unsubstantiated. While I think they did an excellent job substantiating the 261 with the copious sums of evidence behind it, there has been no proof that the 46,000 is a realistic value.
For brand new equipment.
That's for
Well, even
brand
for
new
used equipment. I mean, it may have some value on the market after that. And so not having that in the packet, my whole assertion is that you have to support both sides. You can't just claim one and go, well, but we're being reasonable because this number is so much smaller, and that's all.
Yeah, that's what we're trying to present here. Here's
no-
the brand new equipment, it's 17 years old. What we assessed as fair
It's
market
26.
value for this particular equipment is this, which was which is more than the fully depreciated.
It's 26 years old, when we bought the
So, yeah, so what we're looking at is.
Somewhere in between.
Well, the county has established a value based on studies and other comparable sales in the area. And so based on the other comparable data that they have, the other similar gas stations, the allocation is X.
Right, which is.
Based on those sales and so
Right.
forth, and also some studies that are done. What you provided is, this is what we thought it was, and we just estimated a number. And here's what new stuff is, but you really haven't said, well, what do we think that value really is? Can you back it up? That's what I'm looking for.
And I'd like to chime in on that, because we're up against this quite a few times, in the sense that, is this a going concern producing income? We haven't gotten into that with tax returns and whatever, and that's fine. But the fact of the matter is that if it is a going concern producing income, and that the value of the components are so low, that only leaves one other place for you to put that value is in Goodwill. And that's what you're basically saying, is the Goodwill was higher. But there's no substantiation of that, so we can basically come back to the value of the underlying components in their income-producing state. You tear that completely apart, maybe the value of this gas station is $50,000 from all of its components. But collectively, it is a going concern producing income. Am I correct in that? And do you understand what we're alluding to? Okay, so in saying that, we will continue this case as long as we need to get the evidence that we need to come to a logical and somewhat correct estimate of value. But in effect, basically, if this is what we have, then we're going to have to rely on what we have been presented. And in saying that, what would the applicant want to do? In other words, are we going to summarize this and say this is what we're presenting and let the board work with it? And the complexity generally in a case like this is we're going to take this under advisement because it is a complex case and there's a lot of evidence here. Okay? What is it you'd like us to do?
We'd like to have an assessed value less than what the current
Sure.
going price of the property is. I mean, otherwise the client's going to go out and buy brand new property and it's going to still be less.
In saying that, basically, I don't know where this Demery location is, but I do know where the Acres location is, or the Walnut. But in saying that, if you were to have a location, let's say in Strathmore or wherever else it is, whatever location that is, you could justify the fact that there is goodwill here in Visalia that there isn't in these other small towns.
Absolutely.
Okay? We just don't know. We just have to go by what's been presented. Okay? Panel have anything else?
Yes. What are you saying that the assessed value should be for each of these stores?
We believe it's worth what we have listed on the federal income tax return, which is substantially lower. Anything below the current replacement value of that would be acceptable by the client, and we would like it to be closer to what we have assessed it to be. It's substantially lower. And if you look at the actual work papers of the audit, you'll see that, yes, they have duplicated items there. What we have listed as machinery and equipment is, it consists of all those things that are on page 4, which they have not only included in machinery and equipment on the work papers on schedules, they also included in other schedules as separate items.
I'd like to see that. Can you show that to me?
I can look at the audit work papers. I didn't make copies of them, sir, but I could show you. And this is for the Walnut. I can provide this to you. But let's see. Actually, the better one would rather be the other one to show you. This one's a little more complicated. But both of them are exactly the same. I should have used the same. I tried to use the same verbiage on both of them. But on this, you'll see fixtures and equipment on these two right here. And then the next page, on page 2 here, actually unfortunately I don't have a scanner.
Could you identify the document, please, for the record?
This is the document that was provided by the auditor for the Notice of Enrollment of Escaped Assessment.
What's the date?
The date on this is February 14th, 2012.
Can I add a little clarification to that?
Yes, ma'am.
The auditor is required to reconcile your book values to the audit results. And so that's why items are listed as machinery and equipment, to match what you guys have on your books. It isn't the auditor picking up something separate. It's the auditor was saying, okay, we have these amounts of machinery and equipment that are booked, and in addition to those booked amounts, we're adding other items. As you can see on page 4 of our presentation, it breaks out all the details, and there's no duplication. It's just we could not get any details from your client or from you as to what exactly was making up the machinery and equipment numbers, but yet we needed those numbers to tie to your books to show, this is where we've gotten these.
Is that something that typically, I'm familiar with that report. I get those from my clients as well. Is that something that could be provided to us to help us reconcile this as well?
Copies of the audit
Yeah,
results?
right.
Absolutely.
Okay.
Can I just show this one back? This is the second page or summary I'm talking about. Lists out equipment, other equipment, tanks, security equipment, OS, leasehold improvements, so on and so forth. Provide that to you so you can take a look at it. And then the schedule basically shows for fixtures and equipment, 17,618. If you look at our document, that would be on page 4 as well. And on page 4, that includes, that's 17,618, includes the POS system. And on your schedule that you're looking at right there, sir, like the 4th item down is the POS system again. And the same thing for the leasehold improvements. Leasehold improvements includes the tanks. You can see on that schedule it also includes the tanks.
Well, yeah, we should be able to see that with the other, because this is just a summary, so the other sheets that show all the detail, I'd like to see that.
I have it here. I just didn't make copies. I didn't realize it.
Unfortunately, I didn't either. I'm sorry.
Pass it around if you want to take a look at it.
Or we could take a break and make copies.
There you go.
Sure.
Let's take a break and make copies.
Yeah, there's no duplicate.
Thank you so much.
Would Chair like to do that?
Would be fine. Is there anything else that we would like to bring up prior to this break that we can mull over when we get back? In other words, I'm going to ask the board members, is there anything else that you would like to bring up?
I was struggling. Same thing Mr. McKinley was getting at. When you ask for a number, we were hoping to have, here's our number. Here's what the number is based on. You think it should be the low number that you had originally. Here's the high number. You really haven't given us a number.
In between the two.
Yeah.
Okay. So that's what you're asking for. Somewhere in between.
Somewhere between the...
Okay.
We're expected to be less than the replacement cost right now. And we're saying the replacement cost is $261,000, and what's on the audit is $383,000. Why not just replace the equipment at that price? We're paying an extra $100,000, and we're paying tax on an extra $100,000 that's not there.
But your presentation is based upon what is on the application as your value for Demery of $67,000 total for the whole facility.
Yes, sir. That's what we feel that the equipment is worth, because it is completely, it needs to be replaced.
And likewise, on Walnut, your value is $92,307, correct?
Absolutely, sir. Yes.
And the problem with both of those, Mr. Chairman, is they're insufficient
I
because
understand.
they haven't put the full cost in presenting that to you.
Right. Mr. McKinley, do you have anything else that you'd like to ask before our break? Okay. Then we're going to take a 5-minute break in order to get the copies that we want done, and then we'll reconvene. So we adjourn for 5 minutes. Session for November 18th, 2013, back to in session. We've just been handed the information that the applicant has provided additional information.
Actually, that was from the assessor.
Correct.
Well,
But we pointed
gave
out.
us what the assessor had in their audit summary. So, is there any questions that the board has?
I want to know which one's which.
The top one says BJ's Market, I believe.
One says BJ's Express Market number 2. That's going to be,
Number 2 is the Walnut
There's
location.
a Walnut,
Okay.
yeah.
Hasn't been addressed at all is on the, item number 3, there's $37,000 worth of penalties. Is that still being assessed, or is that being taken off, or?
On BJ's Express Mart 1. That's the Dismer, how you say it? Demery.
It says remove the penalty for 2009. Perhaps this.
Have waived that?
Yes, yes.
They waived it, okay.
Because the value on, yeah, I might have had the prior, because that's coming out for 2009 at 338,090. But I think,
Applicant's statement, it doesn't necessarily say what the assessor says. It says he's on roll.
as you can see, if you look on BJ's Express Mark Inc., not the number 2, the other one, under the 2009 year on the second page of the audit, in the middle, there's adjusted lien date cost value, which is the total value of $372,745. Which is what's actually on the roll. So they have not added the penalty to the roll. They went back and decided to remove the penalty for whatever reason. So there's no penalty issue, from what I can tell.
In looking over the equipment that you have by the assessor, there seems to be equipment provided by the assessor that is not shown on your recaps.
No, we did not mention the signs because they were put in by Shell company, so I did not pay attention to that. The air and water machine is not ours either, so I didn't. And I think this is the only 3 things that are listed in the assessor's list from ours.
Are you leasing them?
No, Shell station will put all the signs and the decals around the canopy, and they provide that.
We don't have a separate assessment at your location to Shell, so possession and control would be who we would assess, whoever has possession and control of that equipment.
Just the sign, what they provide. It's not the equipment. I mean, the signs, because you have, in your list, you have mentioned, a small sign, I think, small BGS, or the BGS.
That's BJ's
And the
too.
wooden mounted sign, best price.
Those are all accessible items. It's part of what
Yeah.
helps you to make money in your business. So those still count.
Not think about the sign.
Looking at the assessment for BJ's Express Mart Inc. for the roll 2009, page 2. It shows the difference is $315,000. Was the
I'm sorry, what are you looking at? I'm
The
not,
differences, the line, right in the middle of the page says differences for the roll year 2009. There's 383, 282, and the next column over the value is 300, 815. In the middle of the page, difference, second page. Second page of,
you're looking at number 2?
no, number 1.
Demery.
Second column,
And you're looking at 800,000?
no,
Oh, I'm sorry.
383,000, the differences line. Middle of
Oh.
the page says 383, 282, and the value is 300, 815. And our page 4, we have, for brand new equipment 2013, the cost would be 261,304. So why would we pay $50,000 more for stuff we can replace at 261,000? Why would it be assessed higher?
Well, basically because you haven't proven the value. I mean, you're saying this is what I think the value is, but you haven't had an appraisal done. You haven't
We have invoices.
substantiated the Goodwill allocation. We know exactly what you paid for those locations, but yet you're not saying, why you paid that amount for them.
Why we allocated that amount to them? Because we have to allocate something to the fixtures.
Right, and this is a pretty common thing with gas stations in that they have these high Goodwill
Correct.
estimates because you're still getting to write that off for IRS purposes, but
Right.
yet you're not doing a fair assessment to the equipment.
Well,
And
we did it
that
over-
takes an unfair advantage away from your competitors who are, there is no gas stations in Visalia for $60,000 in equipment.
It all depends on how old the gas station is.
Well, let me address the differences and the allocations between the tax benefits for either applying it to fixtures or Goodwill. Goodwill is something that you write off over 15 years, generally, and then fixtures and equipment would be wrote off over 7.
Goodwill is generally written off over 10 years is the normal Goodwill write-off.
In the IRS code, it's 15 years.
If it is 15 years.
So we either have a greater amortization or a greater depreciation if we assign more money to the fixtures. We depreciate that equipment in a shorter period of time because it's generally 7 years for the fixtures and equipment. So their bottom line would be even substantially lower. They wouldn't show. Whereas if you amortize it, amortize tangible assets such as Goodwill, it's amortized over 15 years, and it increases their bottom line. So they pay more in income taxes. Does that make sense?
I understand how the income tax benefit works, and I also understand that you can't take a benefit from one taxing agency and deny the benefit from the other one. I mean, it has to be fair. You can't
Absolutely.
say,
We do,
we're going to write all this off, but yet we're going to put it all to Goodwill so that we don't have to pay property taxes on it.
that wasn't the idea behind that.
Well, how did you substantiate your Goodwill figure then?
Well, if you're looking at the differences between the two reports that you're showing, one was 383,000, and we're saying the replacement cost of it with invoices behind supporting each one of these numbers is 261,000. We're saying the equipment is not brand new; it's 17 years old, and the value has got to be substantially less because we do have to replace that equipment very shortly.
I'm sorry, how are you substantiating your Goodwill figure? I didn't understand your answer.
The Goodwill figure is basically, say you buy a place for $650,000, and we know we have $100,000 worth of inventory, okay? The equipment that the people are buying will basically ask them, how much would you pay for the equipment? What would you pay for in the open market for the shelving, for the cash register tapes, for the office furniture, so on and so forth? They give us a rough number. We take that number and allocate it to all the equipment.
Who did you get that number from?
Get
The
that from
sellers?
the client, and it's also included in the escrow documents.
Which are part of our packet?
We didn't provide the.
I did. I sent you the escrow package. Well, that's why you have it. I think you don't.
Yeah, that was actually provided in the that's what the auditor requested when he first You know, he
Oh,
asked for all the
audit.
documentation, walked away, came back, sent us a piece of paper, and never came in and explained to us what his report was.
And part of what you asked us for was the allocation of, Goodwill fixture and equipments for each store, and I sent a copy from the escrow papers that have that allocation. Because it
That's
is in
how
the
we
escrow
knew
paper.
how much was allocated to Goodwill. But it wasn't based on an appraisal or an
Well-
actual value of the equipment, it's just, this is what we're gonna put.
Well, there is no like set process to how much or ratio to decide what's the Goodwill supposed to be and the fixed equipment. There is or like a law that make you allocate them in a specific way. You just use what you think they're worth. That's how
That's
it's
fair market
out there.
value.
Yeah, fair market value.
Well,
When you
What
when you
you
buy
think it's worth.
when
I
you
mean-
buy 2 years old store, I mean if you wanna like take everything and wanna sell it, in the real world, and you think it's worth that much, but when it's 15, 17 years old, it's gonna worth a lot less, and that's how we think it's supposed to be.
And that's determined by your sales price or your purchase price, right?
Yes. If you have 17 years old pump, I mean, actually, if you want to take that pump and sell it outside, it's going to worth zero. Nobody's going to buy that.
It's too old, it's obsolete.
It's too old to be sold. Any of this stuff cannot be sold actually, but you have to set up value to that equipment, and it all depends on how old it is.
Maybe I'm misunderstanding this. What you're saying is that the Goodwill figure is the controlling figure here. And so you established what the Goodwill should be and then said that I'm going to allocate the rest of it to equipment. Is that correct?
No, that's not really what we've done. It's just that the Goodwill figure is not in line with any other Goodwill figures within Visalia.
Okay, well, why
For
really,
other-
I don't understand what Goodwill has to do it. You've got a pump that you're supposed to assess the value on. You've got a canopy you're supposed to assess the value on. What has been done to establish each of those values?
Use the Marshall and Swift guide up with the values, and those are updated annually, and those guides are representative of generally what the costs would be.
Okay, so so what is the conversation about Goodwill doing to the whole discussion here?
Well, because they purchased these properties for $615,000 and for $750,000 respectively. But they're saying the equipment is only worth like 10% of it or less of those values. And so my argument is that they have too much of that purchase price allocated to Goodwill. That more of it should be towards the equipment to be fair to other gas stations and convenience stores.
Okay, but is it based on the fact that the Goodwill should have been changed, or is it based on the value of the equipment?
Well, if the value of the equipment is higher, then the Goodwill would have to be lower.
The value of the pump and the value of the ATM machine.
Based on Marshall and Swift guides.
Okay.
Which are,
So basically, the discussion on Goodwill is irrelevant.
Can I say something also, sir? Actually the equipments would cost, when you buy business, it all depends on actually the Goodwill, how much money that store will generate, You would buy a store that grosses $100,000 in sales, that has the same exact pumps and canopies like a store that generates $50,000. The $100,000 store will cost 3 times as much as the store that would cost to buy for a $50,000 store. So the pumps, if you want to take, let's say, she's assuming that the equipment cost would be like about half of what the purchase price. For a $100,000 store that should be sold for like $700,000, it would be $350,000 for equipment, cost. For the store that makes $50,000 and has the same exact equipment, that store is worth about $300,000. And in that case, would it be fair to, if you want to, have all the stores, I'm sorry about my English, but if they all have to go by the same rules, the store that sold for $300,000 should have equipment costs for about $150,000, and the other store, just because it's sold for $700,000, should be $350,000. You know what I mean? And they will have the same thing. They will have the exact same thing. So
Usually stores that have the same equipment are comparable.
no, they're not.
I mean,
I'm sorry, but they're absolutely not.
Can I finish? Sometimes they buy them at different times, so of course, equipment is depreciated differently. But when you bought this store, it was worth what you paid for it.
Actually,
And
that store, just like for that store as an instance, when we bought it back then, it was worth that much money. Now it's worth half of that much because, like, after Costco had, their gas pumps in the store, we sell like third the gas we sell like right now. Does that mean that fixture and equipment should cost less? In that case.
What's fair is that you're paying the same or similar amounts of property taxes people that have comparable stores to you. And that's what we looked at. We looked at other stores in Visalia that are similar, that have the same amount of pumps and tanks, canopy, similar setup, to see what they were paying. And none of them are assessed at less than $100,000. That's just unreasonable. So is that fair that you're getting a tax bill that's, considerably less than your competitors?
100,000, we're saying it's 60 and 40, close to the same number you're assessing.
No, I'm
but
saying
you're
that
assessing
nobody
3
is
times
under
what those are.
100,000. Nobody is under 300,000.
300,000.
We have gas stations in the area ranging anywhere from $300,000 to $1 million. It depends on
So what's the
how
Goodwill
new
then?
they are.
The Goodwill would be zero then.
Goodwill, I'll tell you the range of Goodwill. It ran from your store, which was the highest at $123,500 at your related store. That was the highest Goodwill we could find other than these stores.
What's the
Other than that, Goodwill is running $21,000 to $5,000.
Yeah, but the other numbers would be gone to, like, let's say, cabinet not to compete, not to the equipment. The allocation would be like, mostly it would be the Goodwill, cabinet not to compete, and then the rest.
Liquor license.
And liquor license, and the rest would go to, leasehold improvement and the fixture and equipment. If the
That's
Goodwill
why
would
we
be
have a few $100,000 allocated to your store. What would we say,
like that store that you said,
$250,000?
the
Liquor
Goodwill
license.
was $120,000. What was the cabinet not to compete? That number
that's
would
your
be
s-
big.
That's your store. I don't know. I just
I'm
looked up
talking
the
about the store
Goodwill.
you bring in as an example.
What are you
The store
saying?
that you provided as an example that has
The store I
Goodwill
provided as
substantially lower
an
than ours.
example is Strathmore Handy Market. That's your store, right?
But that
So
store
you
was
tell
purchased
me.
for around $300,000, I think.
And you have
200
$123,000 of,
How much did you pay for it? 220,000. They purchased
And
it.
Goodwill was $120,000, so that does make sense.
but
When the store is
I
purchased
can't
for-
defend that store. we aren't here to hear
I mean,
about that
that-
store. I'm just saying what Goodwill
We're just
normally
using a
runs.
comparison. That's all we're trying to do, is
How,
identify the comparisons that you're presenting here. That everybody else's Goodwill is substantially lower than our clients. And we're trying to say the reasons why that is. There's Goodwill, there's other things that, make up the price of the selling price of the business.
just to summarize, the valuation is not sufficient.
Chairman, I have one concern. The applications appear to challenge the values for 2009 and 2010. And the applicant's values appear to be, 2008. And there's no differentiation between 2009 and 2010. And the assessor's values are for 2009 only. I think. So we may need to get more information. On that. Is that accurate?
The assessor's values are for 2009, and it was based on I believe, the numbers on the application. There was a little confusion as to what they were appealing, but
Yeah, so that's going to be an
Based on
issue for
those
the board to
numbers.
determine is this 1 year or 2, or how do we want to?
like, for example, on application 2011-00674, which is BJ's number 2, they have improvement structures at $62,832. Well, there was no value for, they don't own the structural improvements. So
Right. So, okay.
but they
So
had
we
the
do
2000.
we do have a mismatch.
Well, we'll have to figure that out.
Okay. Okay, any other comments by the board? Questions?
I do see your argument in terms of there appears to be some duplication. The equipment is listed as item A1 that ties to your tax return in terms of the book cost, and then it looks like it's added in later as well for some of the things. So there is some duplication. It's not big dollars. The thing I'm struggling with, and I think maybe the rest of the board is struggling with, is we need to find a value of the equipment.
Yes, sir.
The value that was presented historically is unreasonable, it appears, based on comparable sales, acquiring new equipment. You've proven that the numbers are very well deflated. You've presented, if I were to buy new equipment, and it's a mixed match, that things aren't exactly right, not all the installation costs are in there. I think it could be fairly substantial for 2013. We're dealing with 09. I don't know the value of equipment and whether it was higher or lower based on the economy in 9 and 10 versus 13. So there might be some differentials there. The county has approached it that they've used, and I keep forgetting the name, I should know it by heart, but Marshall
Swift.
Marshall. So that's
He
how.
didn't even know what that was until.
So there's some studies that are done that say historically across a regional area or a state, I don't know how they break it out, that the value of the equipment should be that.
Correct.
It's as close as to an appraisal probably that we're going to get at this point without you actually submitting an appraisal of the property as of 2010 or 2011. That's the preferred valuation. You have to pay for an appraiser to go out. He's a certified appraiser. He can say the value of that tank right now in the ground is X amount of dollars.
We're not aware of anybody who would, like appraiser that would appraise equipment. You know, I don't know if there is such a thing. There are appraisers that appraise properties, you know, according to the location and stuff, but not equipment, especially that some of them are 5 years old, some of them are 15 years old. So
There are appraisers that appraise equipment.
Yeah. So we're kind of in this, what do we use? You know, we got to use some kind of standard. What number are you presenting? You're just saying a range.
Yeah,
It
give
doesn't
us a
really
range.
give us a
between
number.
Exactly.
You
And
know.
we're hoping for like half the replacement cost that we think
Yeah, that would be.
about
That's
fair.
doubling what we have listed on the federal income tax returns, basically.
There's no basis for that is what I'm getting at.
You're true, but exactly.
There's no basis.
We're also looking at equipment that needs to be replaced now. I mean, it's starting to be replaced. So we're going to start providing, every year the unsecured property taxes are prepared. You're going to start seeing new equipment being placed on there, and we're going to start paying the tax on that.
Yeah, you'll
based on
take
that
the old
value.
off and put the new one on based on what you pay for it.
Exactly.
Sure.
I mean, it's going to be happening soon.
Because this equipment is very old.
It is.
And that's why we tried to detail it in the audit, because of that fact, so that when you do replace items, we can pull them off without, it all being jumbled together where it's hard to
But like
figure out.
some of the stuff was appraised, assist and like you did not ask to go like in the office to see what's equipment in the office, and the office equipment was assist furniture as 21,000, and there is a chair and a desk and a printer and a file cabinet, and I have estimate for each one of those, and they all don't total more than $1,500. Nobody went in the office. What do we have in the office? Nobody did.
I'm not arguing with you that, you probably have a valid point about the office. There's specific items that we could argue, that you could probably say this is worth less than what we have allocated, but we're focusing more on the total value of your location. So some things may be less, some things more. We could take some out of the office and put it on something else. I mean, we're more focusing on the total.
That the assessed value could be more than what the actual replacement cost is because
Not overall.
Combined, it's worth that because it can generate so much income.
Can you repeat that question? I'm sorry.
You just stated that you are not arguing the fact that there are some differences between what he's saying the prices are and what you're saying the prices are.
I know
You're saying
that there was
the
an
value.
estimate made on the office, and then he sent me pictures of the office. I didn't see it
Trying to reiterate
myself, so I'm saying, yes, maybe the office is worth less than what was allocated to the office, but there's also other items that could be worth more than what was allocated. It's an estimate of value for each item, but the total overall assessment is valid.
Is based on how it can generate income.
It's based on
the combined unit.
It's based on market
separately-
value.
Separately, it may not be worth it, but combined, it's worth it because it's generating income, correct?
It's based on market value.
Oh, market value, okay. And our invoices would not be market value?
They aren't inclusive of installation.
Some of them are.
But
Right.
only very few.
Freight and shipping, sales tax.
Sales
But
tax on
some-
any of
some-
this would be.
Some stores that would have the same exact equipment and more would be less than 380,000. Or out there, if she checked, a lot of stores that have the same exact, because the gas station have the same thing, sir. They have 4 pumps and a canopy and point of sale system and the other machines. They all the same thing. A lot of those stores are less than $380,000 to buy the whole thing. Goodwill, equipment, cabinet to compete. Combined price is less than 300. And that's, you can check.
It would have been best to provide documentation to that.
Okay, that brings me to the point that I was about to make is that from either side, and I'll start with the applicant, is there additional information that you would like to submit?
Other than what we provided, not at this point.
And the assessor?
No.
Okay. I think that we're going over some of these issues over and over and over again, and at this point, if the board wants to discuss it in open session and come to a conclusion, or take it under advisement in closed session, what would the board like to do?
Yeah.
Okay, so the consensus is we'd like to take it under advisement. We'll take the evidence that's been presented and give you a decision within 60 days.
Thank you, sir.
Okay, thank you very much. We're going to move to the next agenda item. Which is a stipulation on Tesoro Sierra Properties. Hope I'm pronouncing that correctly. Does the assessor have a stipulation on that issue?
Yes.
Okay. Would you like to go ahead and read it in?
Tesoro Sierra Properties LLC, P.O. Box 592809, San Antonio, Texas 78259. Application number 2011-00558. Assessment number 800-246-457-000. Fixed improvements are $230,885. Personal property $345,743 for a net taxable value of $576,628. Per the breakdown that was provided by the applicant, it was determined that the old car wash equipment was reported in error after it had been replaced in 2010. Also, the underground equipment costs reported included items that were not part of the tanks and therefore received the incorrect factor coding. The breakdown that included equipment details was used to apply the correct factors. As a result, there was a reduction in value of $174,362. This is a gas convenience store car wash.
Okay, and that's one of the things I was going to ask you that I neglected. What was the nature of this case? What kind of an asset is this, and what was the issues?
It's a car wash gas station, and they'd removed the old car wash and put in a new one.
I
So
see.
the old one was $174,000 that we removed from their assessed value to make it $576,000.
Okay, we have a stipulation read in by the assessor. Any further questions? All in favor signify by, or should I ask for a motion? Go ahead.
On application number 2011-0058, ABN 800-246-457000. I move that we accept the stipulation as presented by
You have a second?
Second.
All in favor signify by saying aye. Aye. All opposed? Motion carries. Okay, going down to agenda item number 6, Walgreen Company. Do you have some information regarding this application?
Mr. Chairman, the Walgreen Company application, we submitted a request for information to them, and there was not a response. We have attempted to follow up with emails with the tax representative and have gotten very little communication back. We assume that their appearance here today means that they're not going to contend with the value. And
Okay, so there was no response.
correct.
Then we'll go ahead and handle that as a denial for non-appearance at the end. Ronald Maddock?
Mr. Maddock, we received a signed withdrawal from Mr. Maddock. I'm not sure if the clerk has
Okay.
had a copy yet, but she has. So it
We'll
is.
include that with the withdrawals. Number 8, agenda item 8, Rent-A-Center.
Sent 2 requests for information to Rent-A-Center with no response.
Okay. And agenda item number 9, Comcast IP phones.
Comcast emailed one of the auditors in our division on Friday afternoon saying they would not be here at the hearing. They did not want.
So they said that they wouldn't be here. From the clerk, is any indication that they want to continue this?
Confirmation from them that they were going to attend today's meeting.
Okay, so do we want to deny this?
Non-appearance.
Non-appearance?
Non-appearance, yeah.
Okay. Going on to agenda item number 11, Targan LLC.
Mr. Chairman, the assessor's office met the applicant's opinion of value in this particular case and put it on the calendar because of that. So they seem to be very content with the valuation that they received.
So is that a withdrawal?
It should have been a withdrawal, but at this point in time, we've gone ahead and processed the corrections and placed it on the calendar in order to get it out of the system.
Okay, so non-appearance then?
Sir.
And Best Buy, agenda item number 12.
The assessor's office and the applicant or the agent were able to come to a conclusion not only on the 11 but multiple years of values, and so we are currently in the process of correcting those values. We have obtained a verbal withdrawal from Mr. Lance, but not a written one. So at this point, it would seem to be a denial for non-appearance.
So we want to do a continuance until we have a written withdrawal?
The assessor's office would have,
What's that?
the assessor's office would be just fine if you wanted to go ahead and deny it.
It's within the discretion of the board.
that's-
The rules provide that once you have made a final determination, you can't reopen it, but I don't know if that extends to one where there, as far as I know, there aren't any cases delineating whether that means after a full hearing or if that deals with this kind of procedural thing.
Can we just,
You can take the perspective that they got a notice of hearing, they didn't show up,
that's
they
true.
waived
Mr.
their
Chairman,
opportunity.
If it makes any difference, I was just informed by one of the staff that we have an email confirmation of his acceptance of the values, if that makes it easier for you to decide.
Okay.
Denial for non-appearance, so.
But the board has the discretion to postpone.
No, they're not here, and they've been notified, correct? I think that we'll go ahead and take that one as a non-appearance. And this is kind of strange. Agenda item number 13, W 2005, Fargo Hotel Pool. What's going on with this agenda item number 13?
Withdrawal was received at the assessor's office on the 12th, so this particular case should be included on the withdrawal calendar.
Okay. And we have a,
Oh, yeah, that one got moved to the withdrawal calendar, so you could,
another stipulation. This one's Bombardier Aerospace. Are you ready to go ahead and read in the stipulation and give us a brief summary of what the issues were?
Okay, this is pursuant to the ruling in NetJets Aviation, Inc. et al. And Flight Options LLC versus J. Webster Gilroy as county assessor. The retroactive assessments prior to the 2007 lien date are unconstitutional. For that reason, the assessor is canceling the 2004 assessment of $74,570. The assessee, Bombardier Aerospace Corp., mailing address P.O. Box 7707, Wichita, Kansas 67277-7707. Application number 2008-03846. Assessment number 800-247-575-000. Personal property is at 0.
Okay, we have a stipulation read in by the assessor. Do I hear a motion to accept the stipulation?
On application number 2008-03846, APN 800-247-575-000, Bombardier Aerospace Corporation, I move we accept the stipulation as presented by the assessor.
Second?
Second.
All in favor signify by saying aye.
Aye.
All opposed, motion carries. And we're down to withdrawals, and we'll take withdrawals first.
Mr. Chairman, we could actually treat items 7 and 13 as pulled from the docket because they have been added to the withdrawal calendar.
Oh, they are on the withdrawal calendar.
Yeah, they came in early enough that they got on there. At least number 38 is a slightly different name, but that's 594. And then
So agenda item number 7, and what was the second one?
13,
Yes.
we can treat those as pulled.
Okay, do we need a motion to pull those from the calendar or the agenda?
And
Then we
you
just
can just
wind
treat
up-
them as having been
Okay.
done.
Okay.
And just
Then-
approve them all in 15.
Then agenda item number 15, withdrawal calendar. Do I hear a motion to accept the withdrawal calendar as presented? Have a second?
Second.
All in favor signify by saying aye.
Aye.
All opposed, motion carries. And then we have
Denials.
the agenda item number 6. 8, 9, 10, 11, 12 as applications that we're going to deny for non-appearance. Do I hear a motion to accept agenda items 6, 8, 9, 10, and 11, and 12?
Chairman, I move that the deny for non-appearance application number 6, 8, 9, 10, 11, and 12 for non-appearance.
Have a second?
Second.
All in favor signify by saying aye. Aye. All opposed? Motion carries. Now, did I miss any agenda item on here?
Yeah,
The 16 is in closed session.
yeah, except that I think we should put on the open record that after the October hearing, your board requested that the applicant, it's in a letter to the parties, the board requested that the applicant provide a list of what property was still in California on
Correct.
January 1st, 2011, and provide that information to the assessor, and then the assessor would provide the assessed value of that property. So just for the record, we should note that that has been done, and we do have a packet of information to consider in closed session.
Now, is the assessor able to respond?
Well, we told the parties they didn't have to be here, so
Right.
we're going to just do it in closed session without them presenting anything orally.
Okay. So, again, what has been submitted by the applicant for us to consider in closed session, has that been given to the assessor?
Well, that's what this is the assessor's
I see.
information.
I see. Very good. Okay, that takes care of disclosing additional information regarding our closed session agenda. Any additional information from the board members, staff, comments, and the assessor? Are all ready to go? And our next meeting in December is on what date?
December 16th.
16th. Okay. Anything else? If that's no additional information coming before the board, our November 18th, 2013 meeting is now adjourned.